guys, today we are going to analyze the stock of DCM Shriram Industries. Now, one thing very famous about this company or special is that this company has bought stake in a Turkish drone maker. The name of the company is Zyron Dynamics, and DCM Shriram has bought 30% stake in that company. Now guys, we all know drones will be used for various purposes in future, and even as of now they are used for various purposes like road mapping, defense, and in future also they will be used for delivery purposes. So usage of drones is going to increase and it is going to become a billion-dollar industry in future. Other products of DCM Industries include sugar and distillery, rayon and nylon, chemical business, armored vehicles, shipping containers, and hand sanitizers. Under sugar and distillery, they are providing various types of sugars like refined sugar, sugar cubes, sugar sachets, breakfast sugar, etc. Under distillery also they have various segments. Under rayon and nylon, now guys, these rayons and nylons are used in tire industry. Also, I have also covered this part in one of my video. You can watch that video here where these fibers are used in the manufacturing process of tires. Also guys, in the end, if you feel satisfied with this video or if you found this content helpful, then please don't forget to like the video and subscribe to this YouTube channel. Now moving on. Also under chemical business they have like sodium sulfate, which is used in detergents, carbon disulfide used as a soil disinfectant or by rubber industry. Under organic chemicals they have pharma. Also in agrochemicals they have chemicals like benzaldehyde, benzyl chloride, benzyl cyanide. Guys, if you're a student from a science background, then you might be aware of these chemical names, but if someone doesn't have that background, then it is not quite easy to understand these names. But what is important for us to understand usage of such materials. In the industry of fragrance and perfumery, companies providing lots of chemicals. Also under the industry of dyes, paints and coatings, which is directly related with the real estate sector. Company also has other chemicals which include sodium benzoate, dibenzyl ether, sodium nitrate, sodium sulfate, phosphoric acid, etc. Where sodium nitrate could be used by the food industry and phosphoric acid for fertilizer and other purposes. Apart from these chemicals, companies also supplying armored vehicles which are bulletproof and used for defense purposes. Along with it, they are also supplying containers of various sizes which are used for the transportation of goods mainly used in the ports. If we look at the fundamentals of the stock, then the market cap of the company is around 935 crores, so it is a small cap stock. The current price of the stock is 107, while it has a dividend yield of 1.40%, which is decent, but the book value of the stock is around 71. So there is not much difference between the current price and the book value, which is a good news, because of which the current price to book value ratio is just 1.51. If we look at the stock's PE, it is around 12.8, while industry PE is 13.5. So even the P/E ratio of the stock is slightly less than the industry, and the book value is also less, because of which we can say that company seems undervalued. Now the return on capital employed is 12% and return on equity is 11%. So these ratios are not massive, and it would be good if company is able to improve this return in future. Debt to equity ratio is 0.82, so company has some amount of debt while it has generated 200% return in the last 1 year. Now these returns are massive. Having a look at their revenue from different segments, we can see that almost 63% of the revenue comes from their sugar and distillery business. Rayon business contributes to 17% of the revenue, while chemical business to 20% of the total revenue. As we discussed earlier that company is into container business, we can see that it has a joint venture with the Hyundai Mobis of Korea, under which they are manufacturing containers and they are catering to 25 countries. Also in the defense segment, they have UAVs, which are unmanned aerial vehicles, under which they are manufacturing armed vehicles and along with it, this Turkish company Zaron Dynamics, along with them, they are manufacturing drones. Now, this is amazing product for the company. Products like drones, light bulletproof vehicles, unmanned aerial vehicles, optronics, and communication equipments can prove to be very vital for DCM Shriram in the future and can be a good revenue generating source. If we compare DCM Shriram Industries with its peers, then as we discussed that major revenue of DCM Shriram comes from the sugar segment, so its peers belongs to sugar industry where we can see names like Balrampur Chini, Renuka Sugars, etc. Here we can see that P ratio of all these companies is almost similar, ranging between 10 to 20. Dividend yield for DCM Shriram is much impressive than these companies and it is above 1%. Company is also profitable while for other companies we can also see that some of them are in losses also. There is a positive improvement in the quarterly profit for DCM Shriram whereas for other companies we can see some of them are in negative like even Dalmia Bharat, Renuka Sugars and Balrampur Chini. For them change in quarterly profit is in negative but for DCM it is in positive, which is another great news about the company. If we look at the return on capital employed percentage, then yes, DCM Shriram Industries is lacking in this part and it is just 12%, but for other companies we can see much better figures like 13, 14, 19, etc. Having a look at the P&L statement on a yearly basis, we can see that sales have improved on a longer time frame and even the operating profit margins and operating profit have improved. If we look at the EPS of this year, it was around 4 in 2010 and now it is around 8. Now guys, as sugar industry is a cyclical industry, many times the revenue might differ from previous year and there might not be equal growth in every year because of which sales will be impacted. Sugar industry is affected by a lot of macro factors because of which it is also a capital intensive industry. Here we can see that company has sufficient reserves and they are growing reserves every year. Even the borrowings, if we look at the borrowings in 2020, we can see they were around 613 crores, but in March 2021, company has been able to reduce their borrowings by more than 100 crores, which is another positive sign about the company. Even the fixed assets are increasing, another great news. When we look at the shareholding pattern, we can see that promoters have increased their shareholding in 2021. It was around 47% in 2020, but now it is more than 50%. Another thing which shows that promoters have a lot of trust over the company because of which they are increasing their stake. Also, if we look at the shareholding of foreign institutions, we can see till June 2021 they were not having any holding, but in September 2021 they have bought the stake equaling to 0.11%. Domestic institutions have however reduced their shareholding by a slight percentage, but from the last few quarters they have constantly maintained the same amount of stake. Public has shareholding around 43%, so public has a huge holding in this company. If we talk about company's past earnings, we can see that in the past last 5 years company has not been able to grow their earnings. It is in negative, that is minus 7.2%. Their net income have decreased in the last 5 years, while for the industry it is in positive around 15.1%. So this is one drawback point about the company. Even in last 1 year company has not been able to grow their net income. We can see it is in negative 13.3%, while for industry it is in positive. So company needs to improve on this aspect and they need to improve their profitability. If we talk about their financial position, we can see that assets are more than the liabilities in the short term, but even in long term, assets are much more than the liabilities. This proves that company has a strong financial position, which is one positive point about the company. So guys, this is the chart of DCM Shriram Industries on a 1 day time frame. Now we can see that this chart is in the upward trend, which means the stock is in a bullish segment. Also, we can see once the stock broke this level near 40 in the month of May, how well it has benefited to its investors and it has generated 100 or 200% returns to its investors. Currently, stock is around the level of 107, while we can see that there was a major resistance for the stock at the level of 100, and it tried to break this resistance multiple times. But in the month of September, finally, stock managed to cross this resistance. Sorry, it was the month of October beginning, and then stock gave a good upward rally. But since the past few days, there was some correction in the market. Also, there was a split in this stock in which it got divided into 1 is to 5 ratio. Stock started declining, but we can see here that it has taken a good support from this level of 100 and has made a good green candle, which means a bullish sign. So according to me, a new entry can be made in this stock at the current level. But if someone is already invested in this stock, I think they can place an SL below the level of 85. It would be a good level because stock has taken support from this level earlier. So guys, this was all from this video. If you found the content helpful, then please don't forget to like the video and subscribe to this YouTube channel. Also, if you feel that if I missed any important point about this company, or if you want me to cover any specific stock, you can let me know in the comment section below. Thank you.